Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth, your host. We're looking at the S&P 500 here, and tell you what, to look at the S&P 500, let's look at a daily chart because I just want to recap what happened with the head and shoulders pattern and discuss that here. Just to remind everybody, we had kind of a left shoulder, we had a head, and we had a right shoulder. Not drawing this very well. But then you can see that right here on this day right here, we broke out and closed below the neckline. This dotted line here is the neckline. And then the very next day, it got back above the neckline. So, it could be a failed head and shoulders pattern. It might turn around and go lower next week. There's a couple things that we can say about that just some observations here is when you're looking at Fibonacci. One of the things that I noticed is that we didn't even get to the 38% retracement. There's a 23% retracement or something like that, one of the Fibonacci sequences. I don't ever have it on here because usually I don't enter something unless we get at least a 38% retracement. So I just thought that was odd. Looks like a fairly weak pullback, which could mean, it doesn't necessarily mean this, but it could mean that we get a slight bump from here and then a more protracted pullback like this. So we'll just keep an eye out for that this week. So, obviously if it takes out and closes above these highs right here, these two high days, then we're probably going to just go to new highs, probably somewhere up here to this trend line area, like up in this area. If it just comes to those two lines and then rolls over, then we're probably coming down here to, the 1900 area. So anyway, just wanted to make that clear because last week we were looking for, it had broken the neckline. We were looking for selling to pick up this week, and that just didn't happen. The other thing is you got a little bull flag here. So if you had, you could very well get a breakout here of some kind, like so, and then, who knows, something like that. And then it just could continue on up into this area, or it could start to roll down the wrong button, start to roll down this direction, like so. Sorry, I can't be more help. It's just not that clear at this point. The clearest thing to me is that it didn't even get to the 38% retracement, which, I don't know, my experience tells me that usually means you're going to get some sort of little fake out to the upside and then a pullback. But we'll see. No way to know. We'll just have to keep an eye on it and see how it works out. All right, the VIX, the volatility index, volatility has been just range bound for the longest time, and it's starting to get boring. And we had this huge range way back here, but now we've got this range that really is just like right through here. And until we either come down this way or we go up this way, I think it's just going to continue to chop around in here. So if you're option seller, you're probably not, the premiums aren't too rich for you at this point, which is kind of a bummer. But for you guys out there that are buying options, that also means your option plays aren't too expensive. So start, if you're trading options, be a buyer, not a seller at this point, and maybe you can catch the trend right and make some good money. I wanted to bring up this chart. This is the 13-week Treasury yield, and you'll recall that I had put this resistance line there way back before, maybe back before the first of the year, and or when there was a lot of discussion about whether the Fed was going to raise rates or not. And I came on here and I said the Fed would raise rates because we had broken out above this line, above this area. And I think it was maybe back, maybe this week where I said something, where I said we were going to raise rates. Could have been this week right here. Now we've pulled up, we started to pull back, we pulled all the way back to the breakout point, and now it looks like the rates, want to go higher. And so I'm gonna say something else again. I'm gonna say if you get a close of rates, either, it doesn't matter if it's this week or next week or the week after, but if rates start to move above this line, above this 0.35063 line, then you're gonna see the Fed raise rates again. And actually, they're probably gonna come under quite a bit of criticism from the market, but they really just don't have a choice. I mean, they want to make sure that they give the illusion that they're in control of interest rates, even if it's harmful to the economy. So part of the argument, part of the discussion around the Fed is that they should have started raising rates about 2 or 3 years ago, because pretty soon here they're going to have to start lowering rates. And I don't know if that's true or not. I mean, I don't know really what the Fed should be doing. I disagree with what the Fed does. My true feeling is that they shouldn't even be in existence, but that doesn't matter because that's not what the reality is. So we won't discuss that. But the more important yield is always the 10-year Treasury. And one of the things I see here potentially developing is this triangle. And what do we know about triangles? They tend to be continuation patterns. So you can see the move. The move was here. You got this choppy area through the triangle. Maybe the triangle pulls back here and then breaks out to the upside and maybe gets us up here around 2.1%. Now, but this move looks very. Let me make one caveat, and maybe a couple caveats. When I look at this move, sorry, I'm zooming in and out and back in. Okay. This could be an impulse wave down, in which case this triangle is a wave 4. So you got A, B, C, D, E, and maybe now, maybe rates go a little higher next week and then pull down and take out this previous low. And that's certainly a possibility, and it fits well with our forecast that we're probably going to come down here into this 1.5 area. And this whole thing here has been some sort of wave 2 pullback. It's possible. You just have to see. There's clearly some sort of consolidation going on. The question really is, and there's no way to know at this point, but is it a consolidation of this move and therefore it's going to continue to move downward, or is this part a consolidation of this move? There's no way to know. We'll just have to wait and see which way it breaks out. If it breaks out to the upside, like this, well, that means that this was the move in the direction of the trend. This was consolidation and then breakout. If it does just the opposite, if it tends to break out to this side, well, that means then this was the move in the direction of the trend, and this was all just consolidation and then breakout. Okay? So depending on what side it breaks out will tell us what direction this is ultimately going. My guess is the big trend is up and that we're going to pull back into this box right here and then start moving out to the upside. That's what I'm guessing. But you got to do more than guess. You got to put remember you got to put your reward to risk in there. Otherwise, your guess might cost you a lot of money. So be careful with that whole guessing thing. Let's see. Let's look at Japan. Japan still in a downtrend. tried to break out of it, but then sold right back off. I bet there was some money lost here. A lot of people will jump on, right in this area when you get a trend. Well, they just got whipped right back down. So those are frustrating trades to take, to get a breakout like that, get in it, and then just get whipped right back down. So, but it happens. Not much you can do about it. Here's Germany. Germany also in a downtrend. At least some sort of intermediate downtrend. If you looked at this move as the primary move in the direction, you could see Germany make a new high in here, right in this area around 33, 34. But until we get above this channel here, it really doesn't make sense to speculate on that. The United Kingdom, speaking of United Kingdom, I'm going to post just a short intro of the movie. It's called Brexit, the movie, and it's about the British exit from the EU. I'm going to put a little intro on the YouTube channel here so that you can watch the intro. I really would encourage you to watch the movie. Looks. I've watched about half of it. It's pretty good. It's really gives you a lot of insight into how the European Union works, and just really the lack of accountability within it, and so on and so forth. So I'll be posting, in addition to this video, I'll be posting just a short, maybe 5-10 minute intro to the Brexit, the movie. So look for that on here on the YouTube channel. That's about it. Let's switch and go look at crude oil. So, we talked last time about crude oil getting to this red box, or to this red line, and we did this week. And maybe it still comes up to the yellow box. Not sure. I think you might remember that some time ago I was talking about how this had a certain look to it that would make it difficult probably to get up into this yellow box, and that's why I put the red line on. But crude oil is trying to hammer out a bottom here. I mean, you had this kind of bottom, rally, bottom, rally, bottom, rally, but still in the context of a downtrend. So would be very careful here. Look for oil to pull back to at least this 29.30 area, and potentially lower if get some news or something like that makes things even go a little faster. Let me pull my little chart helper over here. Let's look at gold. Gold, it's been in a downtrend for some time, and about a month and a half, 2 months ago, started to break out to the upside. I suspect this is probably the first move in the counter trend move that we're going to see in gold. It'll look something like this. Maybe like that, let's say. And then, of course, then we want to look for gold to go lower from there. But we're going to have a pretty good run up in gold, probably up to around that 1500 area before we roll over and go lower. So same thing with silver, by the way. Silver and gold track each other more or less. Silver got out a little bit ahead of gold, but then subsequently has pulled back a little harder than gold too. So they more or less track each other. I guess that's what you can say about silver and gold. US dollar JPY, I mean, I've been following this pretty closely, and you can see that this instrument is in a pretty good downtrend here, although we could be in the midst of a pretty strong counter trend rally. I think it's going to go a little lower. Excuse me, sorry. A little bit lower than where we are right now before it bounces up into this area. This box, I had a box drawn down here, but I like this area a little bit better. There's a lot of choppy sideways action here that provides a lot of support for this box. So, gold could go higher here. I would tend to look for a spot to short the US dollar JPY here, at least down into this area. So the euro is also rolled over and is in decline. You can see that here that, I drew all this stuff before, really drew it early. If you could connect this line to here and then you get a counter trend up and then boom, straight out of the gate. So we're looking for the euro US dollar to make a low below this 105 area eventually. And depending on how long you can hold on to that and what your risk tolerance is, you could enter something like that for a longer trade. It's up to you, I guess. Every person has to decide for themselves, what they want to do. Now we looked at CL or crude oil, but let's look at it just briefly on the NinjaTrader chart, because I do have a trade set up here on the NinjaTrader chart, and those are always important. It's in the direction of the STF, and let's just look at the analysis on that. So what this analysis is saying is that anything below, sorry about that, anything below 47.60 is going to validate this trade setup, and you can see you make pretty good reward to risk. So the way this works, the way this software works, well, I'm not going to talk about the way the software works, but this area right here represents your risk. In other words, this line that I'm drawing right now would be my entry, and this would be my stop, and that's a risk unit, okay? And then the reward would be anything from where you entered all the way down to the target. Whoops. Let's just draw it right there. And so the reward to risk is whatever this distance is here divided by the risk distance. And in this case, you can see this is a 7.4. So these trade setups are pretty common, this ABC trade setup, but they're only right about 40% of the time. But obviously, if you're right 40% of the time and you're making 7.4 times your risk, you're doing pretty good. So I just wanted to point that out, because sometimes people would, they look at oil now. Let me get back on oil. Where is it? Now that it's already made this move, it's made a pretty significant move. Now people go, oh, I feel pretty good about being long oil. And you get into oil and it bounces off this support, rolls down, and really takes you out hard. So you just have to be careful and know kind of where support and resistance are on the chart so that you know where to enter and exit your trades. I guess that's it. I don't really want to look anymore at NinjaTrader. I guess I could show you the really big picture on oil. If I can get these buttons to work right. Let me clear my analysis, get that off the screen. See, so oil has had a really good rally here over the last several weeks, 10, 12, 15 weeks. But notice that it's in the context of a downtrend. So you have to be careful about jumping onto these that are right off the bottom like this. It'd be better if you wanted to go long oil. It'd be better to wait and see. Well, this trade setup says that oil is going to pull back to here, but what if it only pulls back to here and then begins to bounce? That's really where you want to be in oil. You don't want to be in oil, down here right when it's hot. You could, maybe it's fun, but it's not a low risk entry point. So, and that's what we're all about here. So, what else do I have in NinjaTrader? We can look at the very big picture of the ES, which is the same thing as the S&P 500 futures. And you can see we have a support box up here off of this high. So, having said that, we could see the ES find a little support here and bounce. And just like the oh, I've just drawn a blank. I completely drew a blank on what I was going to say. But just like, I guess, just like the DP support area or resistance area would indicate, this is a lower time frame support area, a resistance area, and this is a higher time frame resistance area. So that's what makes those distinct. Let's see, what else did we want to talk about? That's really about it on what there is to discuss this week. Let's go back to the S&P 500 just real quick and look at what we have here. We've got a pretty strong move here, but this, like I said, this pullback, even if you go off this lower low here, let me pull off this lower low. I mean, you still don't have a 38% retracement, and this really just has me bothered to think that we could go high from here. Now, there's a couple observations to point out here. One is we did not close above the previous high. So, just to recap, I say things sometimes and people may be getting lost, but we had some sort of pullback to a low. Then we made a lower low. Okay, so this was the low day or the low week here. Now, this is this past week. Notice the market gapped up and ran up. And what happened? Did it take out? Does it take out the previous week's high watermark? No, it didn't. It did not close above the previous week's high. So really, what that means is we're waiting another week to see if we get a close like that, where it takes out that high. Yeah, there's more risk, but I don't know. Personally, I found that just sitting in a position, waiting for it to work for you when it's not going to, is a great way to lose money. And I know we're not here to lose money, so. All right. I just want to remind everybody to share the YouTube channel with your friends and family. Use the comment section to ask me to present something specific here, or talk about a specific stock, or talk about a specific market, whatever you'd like for me to talk about. You can use the comment section to communicate to us here. That is about it this week. Just share my my necklace thing